everybody now wants to sue somebody to make up their money instead of actually work for their money. So everybody's looking for a lawsuit nowadays.
I've heard that insurance companies, everything's going up because they just have to settle. Welcome to Loans Elevated, the podcast that brings you the latest industry news, expert interviews, and insightful discussions that will help you stay ahead in this dynamic market. I'm your host, Brock Lassick, and I've spent years in the trenches of the mortgage industry, helping individuals and businesses navigate the complex landscape of real estate financing.
I'm your co-host, TJ Heidenreich, and together we'll cover a wide range of topics, from business strategies that skyrocket your success to mindset and motivation that fuel your growth.
Okay, everybody, welcome to this month's F.U.E.L episode by Loans Elevated. We're glad you're here, and if you're not already, please be sure that you're following us on all social media platforms at Loans Elevated. So the handle at Loans Elevated. You can also check out the prior F.U.E.L episodes and a bunch of other content at loanselevated.com. But this week, we have a special guest, which is one of my good buddies and an absolute pro in the insurance world. So we are going to be working through breaking down myths about insurance, giving you strategies on how to shop for insurance, and hopefully an overall understanding on how the insurance world works and how to leverage it in your favor. So, Alan Johnson, welcome.
Thank you so much. Thanks for an introduction. Obviously, he's the best lender in the world, so that's why I love working with him. So he sends me a lot of clients, and a lot of clients, believe it or not, don't have the information that they need when they're buying a home. First-time home buyers that you guys deal with, they don't have the information that they need. So that's kind of why I'm here to kind of explain the ins and outs, what to look for in your policies, and things that people don't know about insurance, why the prices are going up, inflation-wise, and things like that. So, and if you guys haven't noticed, that we are, meaning we, the insurance industry, are the highest on the inflation index, but that's diving very quickly right now. So
yeah, good. And I love the intro, and that was perfect. And it kind of just segues us into the first question, because I know that I'm asking this question, lots of my clients are, and I'm sure you're exhausted hearing the question, which is why are insurance rates going up so much right now? But also, besides the last couple of years, why do they always seem to go up year after year? What is the deal?
So insurance, you have to look at it holistically. So holistically meaning, okay, you're having high demands for claims right now. So high demands for claims meaning we have people called roofers, okay? I call them ambulance chasers, okay? The reason I call roofers ambulance chasers because they're the ones knocking on your doors. They're telling you that there's some form of hail damage. And this is just one example of that, okay? So if you get all these roofers knocking on doors, trying to claim it through insurance and stuff, so that's just one piece of the puzzle. But you're also, let's go into the deep dive of auto insurance. Auto insurance prices are becoming, now we got tariffs to deal with. So parts and stuff that are being shipped overseas, you're paying tariffs on now. So those prices are going up. So you got to look at it holistically as every single thing that you guys make claims on. A headlight for a F350 or an F150 now, a brand new one, you're talking $1,500 just for the headlight. So that's more than most people's deductibles that they pay. So just looking at it holistically like that, the prices are going up. The prices to ship product over to us as far as to fix or replace, those are all going up right now. So that's probably the biggest reason that you're seeing all these prices increase as far as insurance-wise is because as the prices of product goes up, obviously the prices to replace your product is if you get into an accident, make a claim on a roof or home or auto, those prices are going up. Electric's going up. Anything electric nowadays, if you fry your electric circuit breaker board and stuff like that, that price is 10 times what it was 5 years ago. Okay. Same thing with plumbing. Plumbing fixtures and stuff like that are so expensive now to replace, and the parts for plumbing and things like that within the home are so expensive to replace that the prices obviously have to increase with insurance and for us to keep up with the inflation.
That makes sense. So you're saying you said ambulance chasers. So are you saying that it's just a trend that roofers are going and essentially making either fabricated or false claims that a roof is damaged? They're getting the insurance companies to pay it. So the insurance companies are paying more claims to replace things that they hadn't done in the past because of a business practice?
Absolutely. So,
Wow.
and listen, I'm not bad mouthing all roofers out there. All roofers are not built the same. There are roofers out there that come and knock on your door, and then he brought up hail damage. Hail damage is a huge one. Okay, it's one of our most prominent claims as far as the roofs go. If you get people knocking on your door saying, hey, I got insurance completely to pay for the neighbor's roof down the road, and I can get yours taken care of too. Okay, there's a couple of different factors here, okay? Roofers will come out and tell you this, but they don't tell you the whole story because they're the ones trying to take care of the claim for you because they don't want you to know the whole story. One, it's going to go on your claim history for the next 5 years on your home. That's going to raise your premium $2,000 to $5,000 over that 5 years, okay? When they don't tell you that part though, okay? So that $2,000 to $5,000, and plus they don't tell you, if your roof is 25 years old, most companies nowadays have only a 10 to 12 year schedule built in. Okay, so that when I say schedule, most people are like, what the hell's a schedule? Okay, well, a schedule is they'll only pay out for a new roof for the first 10 to 12 years of life of that roof. Then it goes into what's called a depreciated value. After the 10 to 12 years, that depreciated value, you might end up paying out of pocket, which the roofer is not going to tell you. You're going to end up paying half the roof cost. You know, so if your roof replacement is $40,000, you to come up with $20,000, that's going to be hard, but the roofer's not telling you that. And then you get into some kind of lawsuit because they've already done the work for you. They want to get that work done as fast as possible. So one way or another, they're going to pay, whether you be paying half of it or the insurance paying the whole of it. That's what the roofers aren't telling you. Okay, so that's one thing to look out. And to me, that feels like a scam. I don't know if it is in real life, but to me, I would be very upset if I was a homeowner, them saying they could take care of the whole bill, and then the whole bill doesn't get taken care of because it's on a scheduled 10 to 12 year schedule, and then it goes into a depreciated value.
Yeah, it's interesting because I've heard multiple clients say that happened, and I'm like, I didn't know this, so I've just told them, well, I mean, if they're telling you to get a free roof, you should just go ahead and get a free roof. Why would you not? But
no such thing as a free roof.
Yeah, just like no free lunch.
Yeah, no free lunch, no free roof.
And it's interesting because the reality is what we're saying is they're a little too tunnel vision with it, where they are getting a quote-unquote cost-free roof today, but over the next 5-7 years, it's going to cost them hundreds or thousands more in their insurance policy every year or month to pay for that roof, essentially.
Yep.
They're going to recoup it somehow. So then I guess that brings up another interesting question, because so many people say, well, insurance is a scam. Because if the insurance company pays for my roof that's damaged, but then they're just going to turn around and increase my rates to get the money back from me, really, insurance isn't paying for anything. I'm paying for it all. They're just a finance company, basically, helping defer the cost for a few years, or what?
Yeah, so different, and we get that a lot. Insurance is a scam. The funny thing is, insurance is a scam until you have a $500,000 claim because your house burnt down or something like that. That's what people need to look at. Is insurance is something that is there for if something traumatic happens to you, not if your microwave blows up, not if your water heater goes out, not if your AC goes out. Those are things that are wear and tear items that you need to fix yourself. Okay, homeowners have some kind of due diligence and responsibility to fix things themselves. Insurance isn't there for little nitpicky things. The insurance is there if something traumatic happens to your home, such as a fire, such as a flood, such as something that's going to be a huge difference maker in your life and financial responsibility. Okay, those are the things that insurance is there. And yes, absolutely, roof is a huge cost, absolutely, but it is a wear and tear item. So in a wear and tear item, we can't replace as an insurance company.
Well, here's the thing, though. The reality is these things are getting replaced, and the reality is even the smaller ticket items are getting replaced at the cost of the insurance. So essentially what I'm hearing is you've got people that are abusing insurance. Really, in essence, from your perspective, is really meant for extreme
catastrophic
events.
Is what I
catastrophic events, not these small little nitpicky things. But insurance companies, and whether it's the paying customers or it's the companies due to competition, or maybe it's lawyers suing the companies on behalf of clients for not protecting them, or something, like, why did it evolve into this thing where you can, say, hey, my video doorbell broke and my insurance company has to pay for it now? Like, how did that happen? And I guess if that didn't happen and people just had to pay for that stuff out of pocket, you're saying insurance would be dramatically cheaper.
Yes. So insurance would be dramatically cheaper if we didn't have to pay for these nitpicky things like you.
But how did that happen?
That's what I'm getting to. So you're evolving and competing insurance companies, okay? Insurance companies are competing with themselves, okay? So meaning like if your State Farms or your Farmers or that in American Family Insurance, we're competing against other insurance companies because now we're getting these people calling it, oh, well, State Farm paid for this or Farmers paid for this or that. Well, that now you're putting pressure on the other insurance companies to compete with that. So if they're taking care of these small nitpicky things, that means we have to also compete with that and also pay for these small nitpicky things that people are doing. So it's ever evolving as you go. As people compete against each other, insurance companies, we're going to start paying for these. But when we're paying for these small nitpicky things, when you have millions and millions and millions of people making these claims, it's going to increase your price as insurance. So that's got to make sense.
It does make sense.
Yeah.
But what I'm hearing is insurance companies just don't have discipline. So it's like a family.
They have discipline, but we've been ruled out of discipline by competing with other people that don't have discipline.
So that's like saying my wife really likes to buy stuff on Amazon, and the Amazon bill just keeps racking up. But it's like there's another husband that will buy this stuff, so I have to buy it. And so now that's the reason I'm in debt, and I shouldn't be responsible.
It's the trickle effect, man. I'm telling you, it happens in all industries, whether it's lenders and stuff. You guys get shopped all the time, and I get shopped all the time because they're all, well, you guys didn't take care of this. I'm going to go down the road to somebody that will take care of it, So, and there's always special circumstances that we take care of these small nitpicky things, but you got to understand, you brought up, you increase my price if I make a claim. You brought that up, okay? So the reason that you got to remember, if you did not have insurance and you self-insured, you're paying all that out of pocket. But the big one is liability claims nowadays. Let's get into that issue, okay? Liability claims 3 years ago was the number 5 claim. It is the number one claim. Fast forward 3 years now outside of physical loss. So that means we live in a litigious, sue-happy society where everybody now wants to sue somebody to make up their money instead of actually work for their money. So everybody's looking for a lawsuit nowadays.
I've heard that insurance companies, everything's going up because they just have to settle frivolous lawsuits, and it all just it's 50 grand here, 100 grand here, 2 million here, and they settle these lawsuits depending on how good the lawyers are. And essentially, we're just all subsidizing that cost.
100%. So let's say you have 300,000, because most people have 100,000, 300,000, 100,000. If nobody's ever explained it, quick explanation for that is 100,000 per person in the other vehicle, $300,000 aggregate, meaning no matter how many people are in the other vehicle, that's what the insurance company will pay out. Well, now these lawyers pay for these lawsuits, or hiring them right away and saying, hey, how much is your max? 2 people got hurt in my car. I want that $300,000, and they'll come after that $300,000. And a lot of insurance companies, rather than paying and fitting the bill to battle this, are just paying out the $300,000.
Well, and what sucks in litigation, anyone who's been in it understands that there's this tug and pull, because it's like, okay, we could fight. We know we're right. We could fight this, but if we fight it, it's going to cost us more than the 100 grand we could just pay them to give them what they want. So it's really just shut up and walk away money, because either way it's spent.
Yeah.
So, okay, so now it comes back. All right, so now I'm distilling this down to insurance companies don't have the discipline to stay true to what they should actually cover, and people don't have the integrity to take what they've paid for. People just literally try and expose insurance companies to silly legal claims, and they're asking insurance companies to pay for stuff that they're not actually obligated to pay, but they're just forcing their hand because they want to avoid legal expense. So that's just like dishonesty on the paying customer.
Well, you got to think most people have the mentality, as far as the insurance goes, that they're owed something. Hey, I've been paying this premium, this premium, this premium. So your insurance company owes me a new roof, or they owe me this settlement on this claim, or owe me. So that's not the way to look at it. If you want to keep your prices down for insurance, do not look at it that way. If you feel like you're owed something because you pay a monthly premium, we're there for catastrophic again, okay? We're there if you have that house fire, if your home blows up, if your home floods, we're there for that kind of stuff. Okay, we're not there for the nitpicky kind of stuff. If you're in it for the nitpicky and you think an insurance company owes you, your price is going to keep raising, and every single 6 months or year, whenever you renew, and your price goes up because you keep claiming these nitpicky little things, and you're asking why. That's why.
Yeah. So,
and you believe it or not, insurance companies do look at your severity, whether it be comprehensive or collision or something like that. So when I bring up comprehensive is your windshields. It's your small little things that you make claims for. If a deer jumps out in front of you, absolutely, that's something you need to claim. But if you're claiming a windshield 4 times a year, you're kind of taking advantage because you got a little ding on your windshield that could be usually fixed by filling it in. Well, most people are saying, hey, I want a whole new windshield because I want it to look sparkly and shiny and I want it to look brand new. And you'll never tell that. You're the only person that's going to be able to see that rock chip, but you're claiming 4 windshields a year. That's kind of taking advantage of the company because, again, we don't raise your rates because of a comprehensive claim.
So, but in general, the rates are raising just across the board because all those things are stacking up.
Windshields nowadays are on average, if you have lane assistance, if you have adaptive cruise control and things like that, that's $1,200. They have to reset that windshield. That's $1,200 coming out of the company's pocket that you're not paying anything on. It's comprehensive, absolutely. But if you're making that claim 4 times a year, you're talking $5,000. I bet your premium's not $5,000. On some people's premium's not $5,000 a year. You know, so that's how you kind of have to look at it in context wise.
Okay, so that makes sense. I will drop one positive plug because I've been busting him. But my insurance, he covers me on all of my policies. My insurance this year actually went down, for the record. So I'll bet you, I don't know if there's anyone that can say that.
Yeah.
So
especially
he is
right
really
now.
good. And
to bring that up too, and to kind of stick on that point, we actually in April dropped our rates 4.5%. 95% of the companies out there are still raising their rates. Okay, we took a 4.5% decrease, and I'm going to shout that to the top of the mountains because that is very rare in the industry for the last 3 years right now. And there are still companies taking your 20 to 30% rate increases. We took a 4.5% decrease. Okay.
Yeah, that's huge.
So I want to point that out.
So just to quickly summarize, you've got what you think are dishonest business practices with service providers that are taking advantage
Not all
of
service providers. I want to point that out. There are some honest people.
We're not calling everybody out,
No.
but just that's a big thing going on. Roofers or probably other service providers forcing claims. You have litigation, so people chasing money that probably isn't theirs to begin with, and litigating to get their money out of it. But then those two seem avoidable if people would just act with some integrity. But then you've got the cost of goods, which is a big mystery with these tariffs coming now. That's crazy because everything could even get more expensive if we've got headlights getting more expensive and the hood of your car getting more expensive. So you got that. And then you have just the frivolous small claims to stay competitive. Those are the 4 main reasons we're seeing rates go up.
Absolutely. And I want to touch a little bit more on the hail damage part of it. Hail damage is something that happens into your tornado alley states, like your Missouris, your Ohios, your places like that really do get the hail damage. But what if you'll just do a little self-due diligence and look up hail damage, just look up images of hail damage. I want to see images of hail damage. So you don't have your roofer going up on your roof using a poke stick and putting holes in your roof into your shingles and say, oh, this is from hail damage.
So you're saying there's people that are just fabricating
absolutely.
hail
It's
damage.
fraudulent 100%.
Interesting.
Fabricating those.
Wow. Okay, cool. So that's why insurance rates are going up, but I will say I'm covered by Alan and mine went down. So if yours are going up, you should probably call Alan. Now, number 2 is how, if you're a customer shopping for insurance, how do we ensure we're getting the best deal? I know that you do things with a lot of our clients, like don't just cover the house, cover all of everything they have. You've even got some of these tricks where like you can add an insurance, like a life insurance policy that costs some money, but ends up saving them so much money on the other side that it's a net save. They essentially get a free insurance policy out of it. So you're pretty creative in it, but how do people get the best possible deal on insurance?
Best possible deal is by bundling everything together. So usually if you bundle your auto, your home, and right now we've actually extended our discounts. So like on discounts on umbrellas, adding umbrellas, life insurance policies and things like that, I do everything. If you add a commercial policy, and when I say commercial policy, I'm talking about adding homes, adding whatever you may do for a living, whether it be a contractor, whether it be owning your own restaurant, owning your own franchise, I do all that, and I can put all that together where you have it under one roof, and it saves you a ton of money. So, but let's talk about umbrellas for a minute. Umbrellas, a lot of people are like, what the hell is an umbrella? So, what an umbrella is it's $1 million over what you own, okay? It's protecting you as well against those people that do like to put those lawsuits together, and they do chase it through they hire lawyers right away. They get out of their cars and say, oh, my neck hurts. Well, this is what an umbrella does. An umbrella covers it it only costs you probably $300 a year to put an umbrella in place. That's $1 million over your auto insurance, $1 million over your home insurance. And what it is over the liability portion of that. Okay. And when you're talking about the liability portion of it, that's the biggest part right now, piece of the puzzle that, like I said, we live in a litigious sue happy society that you want to make sure you're protected. Well, a lot of times when you add an umbrella and you add the discount we add for the umbrella, it pays for it in itself. So if you're doing $1 million, the only part that people miss is that you have to up your rates to $250,000, $500,000 in order to have an umbrella.
Okay, let's
over
back
the
up.
top of
Hang
those.
on. So what you're saying is in order you have to your auto coverage, instead of the 100 300, it's 250 500. So in other words, per person 250, per event 500.
Yes.
So that increases the cost of your auto insurance a little bit.
Slightly.
Okay.
But the price that the discount often outweighs it. So the discount for the home and the auto together will pay one for the $300 that you're going to end up paying for the umbrella. And it's going to slightly increase your price for your auto insurance because you have to raise the rate to the 250, 500 in order to have it. Because they want to make sure you reach those limits. And that's the lowest limits that any insurance company will let you have in order to put an umbrella in place is that 250, 500. So you're going to pay a little bit more, but you're going to get so much more coverage. So it's kind of a peace of mind thing. So you don't have to worry about if I get into an accident, is this person going to sue me for $1 million?
Does your home and auto insurance seem to go up every year without fail? Mine did too. I thought this was just the way the insurance industry worked until I found my friend Alan Johnson with American Family Insurance. After more than 15 years with the same insurance agent, he saved me over $3,000 per year when I switched. I refer all my family, friends, and clients to him, and their experience is similar. Great rates and a great experience. Call Alan for a free quote today at 801-708-2962. We'll dive in there. Now, I do want to say one quick comment, which is our team, we talk about our strategies as mortgage people, as holistic mortgage planning. And it's not drive-through mortgage, where we don't treat it like a transactional thing. We don't look strictly at just this mortgage, what's the lowest rate. We look at the whole picture, understand your goals, and try and put you in a place that's going to be more favorable for you long-term, all things considered. Now, the cool thing is, which I didn't even realize this and I haven't ever talked about, is what you just shared. You essentially take the same approach in your world where you're like, man, how can I look at this holistically, get them better coverage that they may not even realize they want or need, and at the same time, either save them money, like in the life insurance example, or cost them the same amount of money and they essentially get free coverage and free peace of mind. That's pretty cool.
Yep, absolutely. But to that point, we're not a drive-through service.
Yep.
Okay. I am a very big people person. So everybody that comes through my door, one thing that you're going to get from me is you're going to get my personal cell phone. I have 9 wonderful employees that work for me, but I want you to associate with me. Okay. And there's a lot of agents where when I say drive-through service, I'm not one of those people that like to have customers that don't know what they're covered for at the very beginning. I am not that service. Okay. If you want that service and you want the hands-free and you want to be, everything's going to be automated, I am not an automated service. I am a very hands-on service. So when you need something, you have somebody to talk to. You have me to, hey, Alan, is it worth it to make a claim? Hey, Alan, I had this roofer stop by. Do you think it's worth it to make a claim? I want to be that person that you can reach out to. And that's kind of going away nowadays. Yeah. A lot of the younger generation want to have that automated service until you need somebody. And then when you need that person, having that automated service isn't such a great deal. There's so many people that have gone away from me because, this price is so much cheaper, or that. I'm not the cheapest price. I am the cheapest price on the home. I do have to tug my own horn here, but I am the cheapest price on the homes. But sometimes I do find competitors that beat me on the auto side of it. So, but you're going to work with somebody that you can't call. You can't get in touch with. You can't tell whether to make a claim or not. And believe it or not, a zero payout claim, they pay out $0 because they tell you, hey, we're not going to cover this claim. This claim is uncoverable or whatever. Guess what? That still counts against you for the next 5 years.
Okay.
So your rates are going to go up when people are competing against you. They might waive it, the person that you're with, but if their prices skyrocket, their rates go up, the other insurance company is going to be able to pull through that $0 claim that you made, and it's going to make your price higher when you're competitively shopping.
Just because it increases the risk.
Just because it increases your claim volatility. So once you make that claim, and if you called me instead of having an automated service, you're going to find out from me, yes, I think it's worth making the claim, or no, I don't think it's worth making the claim.
Yeah, which is huge. And I will say, the way I found Alan and he earned my love and trust was, one, he did a great job. He took really good care of our clients and my team for a period of time before we even met. And then I finally gave him a chance to work on mine. He ended up saving me. I was covered by the same person for 16 years. And he looked at all my stuff, combined all my policies. He ended up saving me $3,000 a year after I'd been paying the same person for 16 years. Lots of loyalty, sent that same person tons and tons of clients. So he is extremely fair priced, but also the service level is there, which is how he won the love in the first place. So don't get fooled. He has really, really good prices. Now, those are some insider secrets on how to shop for the best deal and how to get the best deal, really bundling, and then having somebody who knows their industry, because that's the crazy thing. Lots of people don't fully in-depth understand their industry, so they can't even guide people the same way you can. That's another big thing. You need a legitimate pro, which I can vouch for Alan. He is a pro. So now let's talk about some of these other things that you mentioned, like people have young drivers or speeding tickets or accidents. They have these things, like there's a way to curate the policies to be most cost effective, but you have to be mindful. You have to have somebody like you that's going to give this insight. But let's talk about that. How are people, if they have young drivers or they have tickets or whatever, how can they navigate this to not get crushed on all their insurances? Are there creative little loopholes that they can use?
Absolutely. First, call me. Okay. So this is the thing I'm talking about. In an automated service, when you add a 16-year-olds are the most expensive thing that you can do to your policy. But there's so many different creative ways. And listen, brokerages are fantastic. Brokerages are good to work with, but they have your best interest for the first year. After that first year, they don't have your best interest. They're going to go with whoever's going to pay them the biggest spiff or anything like that, different companies that do pay spiffs, okay? Brokerages are fantastic in the first year, usually I find out with people. But again, it's that person that you need to call, and you don't have to reach out to a third party in order to save yourself some money. So, but as far as adding 16-year-olds, again, most expensive thing that you can possibly do to your insurance, there's discounts, and I'm going to try to get you every single discount I can possibly think of, but creative ways to save you money when you do add that 16-year-old. Usually there's a good student discount. We offer that good student discount. Usually there's what's called a young volunteer discount. I'm going to get you that young volunteer discount. So there's other things, but the biggest thing to save you money when a 16-year-old gets behind the wheel, the reason that they're so expensive, because 81% of 16-year-olds that get behind that wheel for the first 2 years, they're going to get in some form of accident. 81% is a high percentage.
I did.
For a 16-year-old. That's why they're so expensive when they get behind the wheel at the very beginning. But there are some things that you can do. They can take driver courses that they can lower the rates of. When I say driver courses, it's through the state and stuff like that. It usually gives you like a 10% discount. We offer that. There's things like putting a car at liability only is huge, okay? Putting car at liability only for a 16-year-old and not going out and buying them a $40,000 vehicle for their first vehicle, they're probably 81% chance going to get into an accident, some form of accident with that vehicle. Absolutely, you want to put them in a safe vehicle, but there's a ton of vehicles that you can put them in that are going to be that you can write as liability only. And when the difference between liability only and full coverage is only when you create the accident. So if that 16-year-old creates the accident, that's the only time liability affects you. So, and I tell people, have a threshold. So if your threshold is 5, mine is $10,000 personally. Okay, so that means I can walk away from any car under 10 grand. I'm going to put it liability because I can afford to walk away from that. Okay, your threshold might be 2 to 5 grand. Okay, that's still a good threshold, but that's the car limit that you would want to buy, 2 to 5 grand or 10 grand for my sake, and say, hey, you know what? I'm okay walking away from this liability. And it's only walking away from the physical damage portion of it. You're not walking away from the liability. You're still going to have that liability coverage, but you're walking away from the physical damage part of the part of the policy, meaning that I'm okay to walk away from $10,000 on a car. I'm okay to go get another vehicle after that.
Got it.
Okay.
But is that really worth saving? Yeah, you got to make a decision because would you rather
cut your
just
price
pay
in
the extra
half. The 16-year-old's price in half.
Yeah, which is good.
Absolutely.
So yeah, we got that's a risk assessment you'd have to make, but that's the insight Alan will give. Now, there's some other things that we've looked at. You and I have talked about where having young people on the policy, we can just assign them only to a specific car.
Absolutely.
So that the other ones don't get covered. And I know I've talked to lots of clients and family members where their policy goes up a ton because their new drivers come in and they are not just driving their $10,000, starter car, but the insurance company basically says, well, there's risk in them possibly driving the Escalade or possibly driving the more expensive cars. Is that something that, because I see people fall into that trap where their insurance goes up so much because they're assuming they'll drive all the cars, not just the one car. Is that a normal thing, or is that something that you have to strategically set up?
No. So every insurance company, you're insured on every single vehicle within that household. So, but to mitigate the cost is what I'm saying is you're putting a car at liability. So you're buying that cheaper car for them so you can assign them to that car. So if let's say you're doing a 2008 Jetta, which has great crash ratings and things like that, but you're assigning that to that car, putting them at liability, but they are insured on every single car in the household. There's no way to prevent that with any insurance company. Okay. The only way to prevent that is to separate them, put them on their own policy, and then it becomes so expensive to do that. But this is why it's so important to have an agent that you can talk to rather than having to go in online, not giving you any advice for this. And then all of a sudden you see your price jump up, more than double when you do it. There's so many ways to mitigate these risks. As far as assigning them to a car, it's whatever the 16-year-old is assigned to, that's the main car that they're going to be priced off of.
Got it.
Okay? And then that risk is going to share on absolutely every single car that you own in that household. But the way to mitigate it is to put that car on liability and assign them to the cheapest car in that household.
Got it. Okay, cool.
But you want them to be covered because when they jump in that Escalator, that Porsche that they want to drive and show off to their friends, you want to make sure that's covered with that driver driving that car.
I can tell you I wouldn't let my kids drive any of those cars.
Wait until his kids get 16 years old, and we'll see. Dad, can I please drive it? Especially if the daughter asks, it's definitely, oh, you want to go drive the 911? You go drive the 911.
All right, so now that's really all I had top of mind. Is there anything, I think we gave a lot of valuable insights, some things to consider, some information that we may not have thought of, probably answers some questions for people. Are there any other details that you feel like are critical that people should know? Is there anything else you'd want to close out on?
Not off the top of the head or top of my mind. The biggest thing I want to get out there is have somebody that you can call and that you can trust. Okay, you might pay a little bit more talking to somebody that you can call, but I'm telling you, when you get into the bind, it only takes one accident to sink your ship. Okay, and when I say accident, I'm talking about that person that's going to sue you for $300,000. I'm talking about that house fire that might happen. You want somebody that can hold your hand and walk you through this kind of things. You don't want an automated service when you're talking about this. And our prices, once I bundle everything together, there's nobody that can touch me in price. Okay, so if your home insurance just went up, if your auto insurance just went up, if your life insurance just went up, and you're looking at life and you never thought about bundling life in there to save you on money, that's the things I want to get across to you guys is that I can do everything under one roof. If you have a commercial policy, if you have a business, if you have a franchise business that you run and you're looking for ways to save you money because that tax man's coming after you, I'm the person to look to, okay? I'm the person that can hold your hand and guide you through that. I'm the number one agent for American Family in the entire state of Utah, okay? That can hold your hand and guide you through that process. And I love doing it. I love speaking to my clients. As you can tell, I have a very hard time shutting my mouth a lot of the times. But I love that because I love to bring that kind of that old school feel to you guys and let you know what you're covered for rather than buying an insurance policy that doesn't cover anything and then you don't know that until it's too late.
Yeah, that's good. Well, I trust them with my stuff, and I will say that their technology is good too. I use it all the time. I don't like, if I can have something tech-driven and just make it simple on my phone and I don't have to worry about papers or any of that crap, that's what I like, and they have good tech too. But then you have great service and great rates. So this is Alan Johnson, American Family Insurance, and we appreciate you being here, sharing some insights.
Absolutely. Yeah, thank you for your time so much, Brock. And the biggest rock star I've ever dealt with and trust my own home loans and stuff through is Brock.
Yeah,
so I cannot thank you enough. You make the process so easy for people nowadays, and they do like that automated service, but you're that hands-on plus the quickness part of it, and I can't thank you enough when you do my loans.
100%. Thank you. All right, guys, if you want to contact Alan, his information will be at the end of this video. Hit him up. He's a great resource, and he doesn't cost you anything to at least talk to him, shop it out, and see if he can save you some money or get you better coverage.
Thank you for tuning in. For more industry insights, follow us on all platforms at Loans Elevated.
And to get in touch with our team, call or text 801-713-4000 or visit loanselevated.com.